All right, traders, we're about to start off the new year with a bang. I've identified my next best potential setup. This is expected to be a home run. You can potentially make 10x on these out of money call options. We're going to be going over this play very, very shortly here. This is the same exact pattern, nearly identical setup to that previous play in the video watch list on Tesla. You guys remember Tesla? I gave you guys the exact bottom at $900, and then I told you guys to ride this back up for that gap to fill towards 1,068. And what did it do? It had a gap close reversal, it shot up and it filled the gap over time. The call options exploded. But what I'm telling you is this is the next best play that I have on my radar, and this play could potentially unfold this week. So I'm going to walk you through the entire trading plan, and then I'm also going to share with you other top plays that I'm looking into here. So let's get into it, guys. The play is going to be NVAX. I am telling you, if you are serious about starting off this new year with a bang, this is going to be the best potential play, guys. This is the best one that I've come across as of now, and it is going to be NVAX. So let me walk you through step by step in terms of what it is that I'm seeing and what it is that I'm looking for on this particular play. So here's what I'm looking for on NVAX stock. So first, let me explain to you in terms of, what I like about this stock, right? It's a very explosive stock. When you're trading options, you want to focus on these momentum stocks that can run up very, very big, that have high volatility and can happen in a very, very short period of time, that can spike very, very big, like NVAX, like Tesla, like mRNA, we had a couple members do very, very well on this play on Friday. These call options exploded. You want to hear something crazy about mRNA? That plan that I gave you guys in the video watch list, the call options, the 257.5 strike that expired on Friday, they were 10 cents right here on mRNA. When mRNA jumped up, over 13 points towards the highs, those contracts shot up to $3. That's a 30x return. That's a 3,000% return you could have made playing those out of money weeklies, right? I still think MNR is a great swing trade. We're going to cover that one. But guys, NVAX, this is the one, man. Keep your eyes on NVAX. So let me walk you through this play here right now. So in terms of NVAX, there's a gap to fill right here at $135. So we're going to be using the gap close reversal strategy, that same strategy that I showed you on Tesla stock. You guys remember, go back to watch the previous video. I'll leave a link down below in the description, right? So I'm looking for that gap to fill. Once that gap fills, I'm looking for consolidation. I'm looking for support to form. Once we start to see a bounce at that level, that's going to be my confirmation to buy into that bounce, right? So I'm looking for the floor to turn into 135. If I see it consolidating, that's part 2 of the reversal, right? So stage 2, and then stage 3 is the bounce. If we get confirmation, the confirmations that I look for in terms of volume and candlesticks, right? Then I'm going to be buying the dip there. Ride this one back up, guys. Look at this. NVAX loves to have gap close reversals, and it loves to fill the gaps. So in terms of NVAX, there's a gap to fill right here towards 177. And there's another gap to fill right here towards 201. This stock loves filling the gaps, and it loves having gap close reversals. Let me walk you through what it's doing right now so you can understand what it is that I'm talking about. So in terms of NVAX stock, you can visually see very, very clearly here. Let me go back a little bit further so you can see this. Look at this stock, man. It loves having gap close reversals. It gaps down, it shoots up, it nearly fills this gap. It has a reversal, right? It gaps down, it fills this gap, it has a reversal. It gaps down, it fills this gap, has a reversal. And what I'm telling you is now the inverse is about to happen. Instead of this downtrending, this is going to be on track. Just look at the support, guys. Look at this channel. This channel has lasted for nearly a year. You have such heavy support towards 135, right? And you have that key gap fill level at 135. So look for it to consolidate at that level. And then once you see your confirmation coming in where it's bouncing, bullish candlesticks are forming, you're going to want to buy the dip into that small bounce, right? And with that being said, ride this one back up. This is going to be a phenomenal day trading opportunity, but the real serious money is going to be in the swing trade, because you can see how quickly this stock can explode. Look at how quickly it exploded from the 130s, and it shot up all the way to $200. Right here, it bottoms towards, your 130s. It shoots up all the way to 240, and you got 2 of these gaps waiting to fill above. So the play on this one is going to be a day trade and a swing trade. That's what I'm looking for. Very, very simple stuff. Simply looking for, right now we're on stage 1. It's bearish right now. You got bearish candles coming in. The chart looks very, very bearish right now. It's having a gap close reversal. So it's in the downtrending phase. Phase 2 is going to be the consolidation phase. And in terms of what are the key levels I'm looking for the consolidation at, right here, 135. If 135 cracks and it's not consolidating, I'm waiting. Where am I waiting till? I'm waiting for the next gap to fill, which will eventually fill, in my opinion, which is right here at $102.60. That's the next level I'm waiting for, right? So if it doesn't look good at 135, I'm on the sidelines. I'm waiting for 102. Now, say it cracks 135 and it doesn't go to 102 and it shoots back up to 135. Well, if it starts consolidating, if it starts bouncing at 135, that's where I'm buying when it looks bullish at 135 or at $102, right? So if I play this at 135 and it didn't work out, guess what? I go in with a little bit more money at 102, make it all back and more. This is a 10x play. You know, you can risk 20 to 30% of what you put in these contracts. I'm not putting in my entire account in these contracts, right? On my most confident play, I'll consider putting in like 30 to 40%. That's more in the higher risk tolerance side. But I'm not risking a large portion of my account. I'm trading at key levels and I'm using very, very tight stop losses. My max stop on this particular play is going to be sitting towards like 130 to 128. If it starts cracking at 135, I'm going to look to step out and I can always get back in, recoup all the losses, and play for that explosive win. So that's the plan on that. I'm going to be guiding members within Trader Society step by step on this play in terms of timing to get in terms of confirmation, and in terms of, maximizing my wins. The first target in terms of swing trading will be all the way up here towards 177, right? But you got to take it one step at a time. There's also resistance at 157. So in terms of targets, 158 to 177, and then more of a midterm is like 202. So that's my thoughts. That's my analysis on NVAX. Our next play is going to be mRNA. Shout out to those of you who did end up killing it on this one and were more patient with this play. With that being said, I still am bullish, and I still think there's room to run on this in terms of a swing trading opportunity. I think the best thing we can do is just focus on buying the morning dips. I think it's a lot better to buy the morning dips on mRNA, like I told you in the last video, than buying the breakouts. So just look for the morning dips and look to buy into that. The pre-market is going to tell you where to buy the dip. If you were studying the chart in terms of pre-market on Friday, it literally gave you like the best level, towards pre-market. You could see like right around here, pre-market lows was at 248. It's slightly cracked, but it gave you a good overall direction on where you should be buying this, which was nearly towards the bottom. So I'm going to be doing a very similar thing. I'm going to be studying the pre-market, looking to buy the dip on mRNA. And this is a day trade and also a swing trading opportunity. So here's where I think we're at in terms of mRNA. I think we're still bullish. And with that being said, here's where I think we're at. I think we're either going to see something like this, where it just has a small little pullback and it rests a little bit, and then it explodes up, or we're just going to see a continued uptrend. We're just going to see another nice green candle come in, and then it pulls back, and then it just continues to go throughout the week. That's where I think we're at. Either way, though, we're on track to explode, right? So the safer play, in my opinion, would be the swing trade. Now, with that being said, in terms of mRNA stock, right? This is what I want you to focus on. 254 is everything. 254 is the make it or break it level. It's most likely going to go back under 254 like it's starting to do. But once this really starts to push back, and once this can turn 254 into support, that's where it's going to start to run. And it's going to run to like 257. Once 257 breaks out, that's when you see that explosive move to 268. So pay attention to that 257. Once 257 turns into support, not 257. Once 254 really turns into support, it's going to be on track to break above 257 easily, in my opinion, because it's already done it. And then once 257 breaks out, that's when it gets explosive and goes to 267. So the key on this, 254 needs to remain a support level. We've seen a lot of strength come in. You could see we had a nice breakout and it pulls back like it likes to do, but you could see it's already showing signs of turning key resistance right here, this 254 level, into support. It's really trying to do that, right? So that's what to look for on Moderna. Costco, I'm extremely bullish on Costco. I think we're setting up for a new all-time high. With that being said, for this one, I would really focus. Let's take a look at the 5-day chart here on Costco. For this to really run, it needs to see 568 turns into support. Once this breaks above 568, turns it into support, it's going to be on track for a new all-time high. Costco is setting up for a very bullish chart heading into 2022 here. It looks like it's really prepping to start to explode. you can see how this stock likes to react when it forms this candlestick right here. So pay attention to this candlestick right here. Just visually look at it. Now look at how it reacted when it was down here. Look at how it reacted when it was down here. See how those candlesticks are basically identical? It explodes up. So keep an eye on Costco, guys. It's due for some sort of breakout. I'm going to keep an eye on this one very, very closely. Just know NVAX is the top play, and Moderna has a lot of potential as well. So in terms of SPY, I ended up closing out my SPY put options. I made a 30% profit return on those. They were up 65% at the on this drop right here. They were up 65% right here and right here. With that being said, I ended up selling them later into the day. I wanted to be more patient. I wanted to see if this can close weak, and I decided to play it safe. I didn't want to hold these overnight due to the theta decay. The theta decay was 20 cents on the contract. Just to hold overnight, that's going to be 40 cents, and then Monday's another 20 cents. So that's like 60 cents. And, you know, I was in at like 242. The contracts were 320. So it just didn't make sense. I was already setting up for break even due to the theta decay, right? So due to those reasons, I stepped out of SPY. Futures are currently up. So it's a good thing that I stepped out of this play. Another reason why I did step out was it wasn't closing weak. It was trying to close in the green, but it did end up closing weak. But I'm glad I stepped out. It was mainly due to theta decay. With that being said, in terms of SPY, right now, I'm on the sidelines for SPY. I'm not interested in the key breakdown in terms of swing trading. I'm waiting to see if we can push back up towards 478. If we can push back up towards 478, start to see some resistance form, then I'm going to step back into the puts. With that being said, I'm on the complete sidelines for SPY right now. I walked away with a 30% profit return. You know, I could have had a 65% plus, but still, a win is a win, and you got to take your profits. And it's a good thing I did that because futures are up, and the theta decay would have hurt the contracts very, very badly. So I did the right thing on that. These stocks, I'm bearish on AT&T and CSCO, and then I'm going to go over Adobe. That's a potential play as well in terms of bullish. And some of you guys have requested me to do the analysis on that as well. So in terms of AT&T, I think this stock is setting up to break down. You know, I really think we are setting up for a nice little pullback here. You can see it had this nice move up, this nice bounce, but it's just looking very, very bearish. You have these bearish pins right here. It's just slanting down. It looks like this is getting ready to sell off. So in terms of when this is really going to start to pull back, it's going to be right here. Once we can crack, and it already started to crack, this key 2463 level. Once 2463 cracks, I think it's going to be a decent key breakdown to buy puts into for a swing trade. I would give this one some time. I would give it like 2 weeks minimum. With that being said, you know, I think we're going to be heading back towards 2373. I think we're going to start to see a dollar pullback within the next 2 weeks on this. I'm very bearish on AT&T. That's a potential swing trade. Same thing for Cisco. I think in terms of where we're at on Cisco is going to be a gap fill play that's setting up towards 61.49 right here. I'm very bearish on this one. With that being said, once this can take out 63.30, that's when it's really going to start to downtrend. So I'm bearish on that one. And then Adobe. This is key for Adobe. So in terms of Adobe, you know, this is basically the same setup as Tesla. Let me walk you through this play. So in terms of all-time highs, you can see all-time highs at the time being we're at 537, has a massive pullback. You guys remember the all-time high play with, you know, Tesla stock, right? So you can see right here, it gaps up, it forms new all-time highs, then it ends up pulling back, almost fills this gap. There's a gap to fill right here at, you know, let's get the exact level, 551.36, right? So with that being said, it officially, you know, hit new all-time highs recently, and then it pulled back down, gapping down twice, very similar to NVAX as well. So once it filled that gap, it started having a reversal, and it looked very, very bullish. And then it recently had a nice little pullback. So with that being said, for this to continue to rise up, this is what you need to see. This new gap fill level right here at 564, this is key. If 564 continues to hold up, if it reacts to support like it did right here, nice wick coming in at higher support, then it starts to break out, right? If 564 continues to hold up, Adobe is going to be very, very bullish for a swing January 21st. That's the expiration I would go with. And it's really going to start to push back up to really start to fill this gap towards your 630 level. With that being said, though, you know, it needs to break above 592. Once it breaks above 592, we have the gap breakout strategy. You guys know the gap breakout strategy within Trader Society, right? Once this goes above 592, that's when this has a gap breakout. And that's when it's really going to start to explode back up to fill this gap at 630. So the play that's setting up right now on Adobe is if 564 can hold, and that'd be the max risk. If you're in on this, you wouldn't want to risk the crack of that because that means it's going to be bearish and really start to head back to like the 560s to 550s. But with that being said, 550s easily. But with that being said, it's setting up. If it can hold 564, we're setting up within some time to go to 591. Once 591 breaks out, we explode and we start to fill the gap at 630. That's my thoughts on Adobe. I think for the long term, it's going to do very, very well. For the short term, we're in a key critical battle. And the max risk on this play is going to be right here at 560, like 564 to 562. That's the absolute max risk on Adobe. If it cracks that, we're heading back to 550 to 540. You do not want to hold through that. So just understand if you're in on that play, that's what you're going to want to do on Adobe, right? So for the bulls to remain in control, they need to simply turn like they've been trying to do. They need to continue to turn 564 into support. If it can do that, the bulls are in control. If it reacts as a resistance and it breaks down, bears take control. So right, that's my thoughts. That's my analysis on Adobe. In terms of the chart, they are trying to hold it up, but there's also lower highs being formed, which isn't that bullish. You can see, previous support right here is starting to turn into lower highs, which is bearish for the micro, but that can change if it pulls back to 562 and starts to bounce. So we have to see how it reacts towards that level. If you see a bullish confirmation towards the level, you're going to want to buy the dip into that. So guys, that's my thoughts. That's my play. Like I said, NVAX is going to be the number one play. So yeah, if you are interested in, trading these live with us, right, at market open, we're going to be trading these options live at market open. I'll be sending out the alerts real time. You'll be able to watch me trade live, via screen share, via webinar. I'll answer your questions as well. And you'll be able to see, what contracts it is that I'm buying and stuff like that, where I enter, where I exit. If you'd like to learn, how to trade as well, we have a video lesson library with over 20 hours of step-by-step content going over risk management, position sizing, psychology, and also the trading strategies, right? All of the unique gap strategies, right? And if you want to learn how to read price action, how to trade price action, right? When to get in, when to get out, how to create your trading plan, how to create the watch list, what scanners to use, right? If you want to learn all of this stuff, guys, and how the game is played, the link is down below in the description to join us in Trader Society. There's so much more to it. Make sure you read all the information explained within the video, and I will see you guys in the next one. For those of you in Trader Society, I will see you. I'll be trading live at market open like we do every single day.